you just see layoffs everywhere, right? Baxter International, 5% layoff. GitLab, 7% of their workforce. St. Luke's, 2% layoff. Zoom, 1,300 employees, layoffs, right? eBay slashing 500 workers there. Canopy, how are they still around? Oh gosh, how are they still around? They're cutting employees. So here's the issue. The issue for us investors right now is you look out there at the market, right? And you're like, oh gosh, this company announces layoffs, this company announces layoffs. It's an extremely uncomfortable market to be a buyer in. Extremely uncomfortable, right? And you got to understand, in this environment, you just have to tough it out. And you have to be a buyer when, unfortunately, you see a lot of bad news. It's much easier to be a buyer when you're seeing like, oh, this company's adding 10,000 jobs. And oh, this company just said they're going to add 5,000 jobs. It's a very tough environment to buy in when you're hearing about this company's cutting 5% of their workforce and this company's cutting 7% and 2%, 4% and 10%, right? It's extremely uncomfortable. I understand it. But just understand, that's where the biggest money's always made. It's always been that way. When you're seeing those job cuts, when you're seeing the layoffs, all that stuff, like that's always the best market to be a buyer in. It's just factual. Like go back throughout history and you'll find it time and time again. Look at the last many decades, right? And so those usually present you with some extraordinary opportunities, including if you look at the great financial crisis, if you look at obviously the crash of 2020. I mean, it's not comfortable. I can tell you that when you're seeing this company cut, this company cut, this company cut. But at the end of the day, you have to be a buyer, right?